Welcome back, guys, to another roundtable. My name is Adam. With me today, Rusmin and Victor.
Hello.
Hi, everyone.
And today we're going to talk about moomoo and Tiger. So these two apps are basically digital brokerages, and behind moomoo is actually a company called Futu Holdings, and behind Tiger would be UP Fintech.
Yep.
And the reason why we're going to talk about them today is because their share prices since July this year has come down by about 70%. So that is a huge drop, and we want to find out what's happened and whether there's an investment opportunity in these two digital brokerages. All right.
Yep.
So first things first, what happened? Why has their share prices come down so much?
So it all started in, I think, July, where their share price actually peaked, right? Of course, the Chinese government is intensifying on the supervision on all those Chinese companies that is traded over in the US stock exchange. So they actually want to implement and focus a lot on the data privacy. And the big drop, the first drop came in when one of the US listed company that is a Chinese listed in US, 360 Digitech, has their app being removed from the app store in China. So after that news came out, a lot of all those listed in US, their apps, those that running apps their share price came crashing down. Okay, so that was the first case. Then after that, of course, 14 October, the Chinese actually said that they will implement the data privacy and security law in 1st November. And that caused the further drop. And finally, on the 28th October, one of the Chinese officials actually says that there's these two brokerage firm, running the business illegally in China. They are basically driving in China without a license. Okay, he didn't really specific name who, but he actually talked about two of these companies. One that's registered in Cayman Island. They have 80% of their funds from mainland China, and also one from Hong Kong base, which have received 55% of their funds from mainland China. So I went to check on both of these companies. They are registered in Cayman Island, but the only one that have operation at the point of time in Hong Kong is actually Futu. So we can roughly guess that actually the 80% funds came from China should be UP Fintech, and the Futu should be about 55% funds from China.
All right. So it's basically all of this regulatory risks, basically the data privacy, and all these fears about, basically the Chinese government doing the same thing again. Or is cracking down on companies. So that's caused the share price to come down 70%.
So I think the main thing now that the share price drop is with regards to the Data Privacy Act law that come into full force, I think in the 1st of November this year. So basically this data privacy law says that any Chinese companies that want to share data outside of China, they must go through cybersecurity review, right? So this cybersecurity review, if let's say the companies, they found that the companies breach the rule, the data privacy law, they may get fined up to 1 million yen, which is not a lot, right? Okay. For big companies like these Chinese brokerages. But they did say that for serious cases, the fine may go up to 50 million yen or up to 5% of the company's revenue, which is it's going to be a big chunk, right? So, so this is something that is, regulation overhang for Chinese brokerages, because these two companies are considered Chinese companies, although they are listed in the US, but they have, like what the regulator says about their business, are actually from mainland China, right? Whether Chinese live in Hong Kong or in China. Okay, so these are about of their customers according to the regulator. Okay, so currently these brokerages, they have to transmit data, some of the Chinese data to clients' data to the US brokerages, especially if they want to trade in the US stock exchange. Okay, so this data privacy law may affect this area, and we don't know how the government is going to implement the rules. Now they have the power to do something regards to this breach. In the past, they've already been mentioning about this Chinese fintech. They are listed overseas. They're breaching some of the rules in China, but they don't have a law to enforce it. But now they officially have the law to enforce it, and that comes into effect on the 1st of November, right? So now there's a big question on how the regulator, on how they're going to so-called review Futu and also UP Fintech when it comes to this data privacy law. Okay, so that's a big question mark. Okay, so the second one is regards to the capital control. And in Chinese law, for Chinese, there's a capital control, right? So you're not allowed to convert your currency more than 50,000 US dollars for other purposes except travel and education. right? So every time if you're Chinese, you want to travel outside of China, you can convert your currency, right, up to $50,000, right? So apparently, these Chinese brokerages have a lot of Chinese mainland customers that are fund park in their accounts, and we don't know how they actually manage to convert those money into foreign currency and put it as an investment. Okay, because according to Chinese law, they are not allowed to invest outside of China, except the fact that they can actually invest in the stock connect that they have with Hong Kong Stock Exchange. They can invest in some Hong Kong stocks, but definitely not US companies, right? And these Chinese customers, they are under Futu and Tiger, they can trade in Singapore, in US freely, okay, but that is not allowed in China. Okay, so this is something that I think the regulator is also looking into. So it's going to be a big trouble if, let's say, they start to ban those trades moving down the road. So it's going to be a structural issue for Futu and also our fintech.
All right. So I think this is the law that's basically scaring the investors in the market right now.
Yeah.
And I think you mentioned there will be fines, 1 million renminbi
yen,
right?
Yeah, but also up to 50 million.
Up to 50
or
million
5%
of revenue.
Yeah.
But those are just fines. And you could say that fines are just the cost of
One
doing
time,
business, right?
Yeah.
But I think the main concern among investors now is that would they actually take action and kind of just outright ban their Chinese customers from trading in foreign securities?
Yes. That will literally change the whole business.
That will change the whole business, right? So I think that is the impact that everyone fears. And you were saying that 50% of
55%
of Futu's funds come from, allegedly, because there's no confirmation actually.
Yes, correct.
Right, it's based on what the Chinese official is saying, and the other ones, and for UP Fintech is 80%. So that's a whole lot of business that could be wiped off.
Well, yes. So Futu actually came out with a media report responding to some of the media that actually cover them, because some of this media company basically says that it's Futu and Fintech that the regulators are talking about.
Okay. So they outright say it.
They outright say it. So the company actually did release a media report, and they say that they are in compliance with the local rules and regulations, and of course, when it comes to Hong Kong, Hong Kong, they comply with Hong Kong laws, right? Mm-hmm. But Chinese regulator may see as Hong Kong is also part of China, and then they may regulate them according to China law, right? So that's something that is up in the air. Everyone is just watching, but the price has been crashing now because people are kind of like expecting the worst to happen.
So I think 70% is a big drop.
70-80% is a big,
very, very big
crash.
It's a crash. It's not a drop, it's a crash. So sorry about that. So it is a crash.
So this is something that I think overhangs regards to UP Fintech and Futu.
All right. So I think that's the fear at the moment, because they think that all these things are happening. But we want to take a step back and kind of just look at their business fundamentals and how have they been performing up to this point before all this regulatory overhang is coming in. Were they still growing? Were they still performing? And how was the business like actually?
Okay, so you look at the moomoo, let's say the owner behind moomoo is actually Futu, right? So Futu, you look at their paying clients, basically people who trades on the Futu platform. They put deposit and they make a transaction on that. They have about close to 1 million customers as of first half of 2021. Okay, so this is going to double, I think, by the end of 2021 as compared to 2020. And 2020, if you look at the numbers of paying clients, they're about close to 500,000, and this number is more than double versus 2019. So the company has been doubling in terms of paying clients, and their platform seems to be very engaging. I think people are using it. In terms of DAU over MAU, they call it user engagement is about close to 40%. Right, so every day there are about 40% of the customers are using the app. Right, so it's pretty interactive because if you log into moomoo, they have community base. You can see people posting stuff, and it's very engaging as compared to your traditional broker app where the fees that they charge are very expensive and it's boring. It's outdated, right? They don't follow with the mobile development age, right? And this Futu and Tiger, basically they came up with the better user interface, right? And because of that, I think a lot of people just sign up, and on top of that, their fees are a lot more reasonable and affordable, right, as compared to traditional broker, right? And if you look at the revenue that they actually recorded so far, I think their revenue has more than double or rather triple as compared to 2019 versus 2020. And as of 2021, I think we can look at the revenue is likely going to double by the end of the year. Okay,
so for Futu?
This is for Futu.
Yep.
Right? And look at the net profit also is likely going to double up by the end of the year. Okay, so margin, you're looking at about more than 40% operating profit margin.
All right.
Very, very attractive. Okay, so this company has a lot of potential, right? If let's say you put regulatory aside,
Yep.
the runway for them is big, right?
Yep.
Because the percentage of Chinese that own share is still very small. According to the stats, I think it's about 7% of the people who invest in their net worth is actually pegged to equity is about 7% only, and mutual fund, right? But property is about it, 66%. But you compare with the US, I think equity is about 32% versus 7% in China, right? And property, on the other hand, is smaller, 24%. So Chinese still loves property, but with a lot of regulation on property nowadays, people may start to move towards to equity. Right? Because crypto is a market where it's banned in China, so people may start to move into equity. Right? Over time, I think we can see this market pie actually expanding. And the same industry, tailwind is going to benefit Tiger as well, which is the UP Fintech. If you look at the UP Fintech, I think their growth is actually very similar to Futu. If you look at their accounts with deposit, basically it's almost their paying customers, has also almost doubled. I think it's likely going to double by the end of the year. And same thing in 2020, the numbers are more than double, right, as compared to 2019, right? So these paying customers, of course, have been transacting on the platform, and because of that, their revenue also has grown quite substantially, also almost double. And by the end of 2021, I think we can expect it's likely going to double as compared to 2020. Okay?
Yeah, I've been hearing you saying double a lot. So, so I guess these two companies have been seriously high growth companies in a growing
high
business.
growth, high margin companies.
Yeah, high growth and high margin.
In fact, I think the potential is there as compared to Robinhood. I think their closest competitor is Robinhood. Because if you look at Robinhood, let's say their customers are in the US, right? In terms of population, China is definitely, I think, tripled the population of US. And on top of that, US is sort of like a merged country, you know, where a lot of people invest and all this. But like Rusmin said, China is only like 7%. Majority is doing the property. So there's really, really a huge potential for, Futu and UP Fintech before all these regulatory things happens. And
so if you look at the Tiger margin, it's actually UP Fintech margins. Their operating net profit margin is actually lower as compared to Futu. I think they are at about less than 20% kind of benchmark, but it's still good, right? As compared to a lot of companies out there. And this lower margin mainly because of the fact that I think UP Fintech, when they first started, they actually used interactive brokers as a platform for them to. It's basically they are the introductory broker, right? They
tag the license.
They pack the license under the interactive broker. Basically, they sign up all the clients like you and I, give us free shares. Right, that has been very popular among all their clients. And then as they start to place the order, then Tiger will put this order and ask interactive broker to execute for them. Right? But of course, recently, over the years, couple of years, they have actually been trying to get their own license, clearing license in the US. They've acquired companies in Hong Kong. In Singapore, they just got their license. So I think we can expect the margin to expand further for Tiger as they start to bring these clearing trades in-house. Right? So similar to Futu, if they manage to transfer everyone into their own clearing house. Okay, because at this stage, about it is still cleared by interactive broker. In terms of percentage, as of 2020, I think about 75%, three-quarters of the business are being cleared by interactive broker. Okay. Yeah, so it's pretty a big chunk. It used to be 100%, but it's been coming down. Right. So basically similar to Futu, I think UP Fintech, the long-term potential is huge. They both are disrupting the traditional brokerage industry where they charge high fees. The user interface sucks, right? And they come up with better products, in my opinion, as well. Right? So this is something where I think it's up and coming, the industry. But of course, the regulatory overhang is currently now affecting these two companies.
Yeah, among the two, I think the more dominating one is, I think, Futu.
Okay.
Right. Yes. Yeah. They are a lot bigger, and it's backed by Tencent. The UP Fintech is actually backed by Xiaomi and interactive brokers.
Yeah. So actually, both of them have big backers as well.
Big backers. Yeah.
Big backers. And a lot of growth. Both of them are growing, and their margins are very high.
Yeah.
Yes.
As well. So I think the long-term business fundamentals for these two actually they're tailwinds in the industry.
Yeah.
It's a growing market, huge market in China.
And they got COVID booster, right? So 2020 is the year where I think all the retail investors come online and suddenly start to trade, and this is likely going to stay. People will continue to trade markets because they make money
Yep.
in the up bull market.
All right. So I
Yeah.
think we can see the long-term potential, but of course the risk of that regulatory crackdown is very real.
Yes.
Yeah.
That's why the share price has come down. So I think the question right now is for people who are still on the sidelines. They're looking at these two companies. Lots of potential. Share price has come down 70%. Man, is there an opportunity to look at that?
Oh yeah.
So how would you value, Futu and UP Fintech? How would you value them, and would you think they're undervalued? Would you invest in them?
Yeah, so I think for me is I would use price to sales to value them at this moment first, right? Because Futu and Tiger in the past they used to make negative profits, but then of course recent years they already been profitable, right? But the records are very short. So let's say I would just use price to sales to compare. If you look at Futu after the drop in the share price, right, they are still traded at about 11.07 times price to sales. Tiger is about 4.63 times after the drop, and their closest competitor, which is Robinhood, is at 6.97 times. So we can see that actually Futu, right, is still at a very, very high valuation, right? But then I think they can justify that because their growth potential is there. Right, and Tiger can drop so much is because I think Tiger also partly because if the 80% of the fund is from mainland China, they're going to be hurt, very much hurt by the regulatory, right? Then if you look at Charles Schwab and IBKR, Charles Schwab is about 8.47 time and IBKR is about 2.46 time, right? So I think the key is what is all these two players doing, right? I think right now is that they also trying their best to diversify out of the China market also, right?
Yeah.
So you can see that Tiger actually bought into a Hong Kong security, and also recently they
already have a license in Singapore,
yeah.
and they've been getting a lot of customers, and then Futu follow the suit, and of course Futu signed a lot of clients in Singapore as well.
Yeah. So if you look at their so-called like their press release and all this, they keep mentioning about Singapore capturing a lot of accounts and all this. So they are diversifying away from their typical market. But of course, Singapore is still a small market as compared to the China. Obviously, we hope that
we can't even compare to one of their cities, man.
Yeah. I mean, obviously, we hope that when the regulatory result came out, if it's not that bad, then I think there's really still potential.
I'm sure they will work and do their best to comply with the government officials.
Yes,
They're not going to mess around with that.
Of course,
They'll do their best to make sure that everything's going to be okay.
Yeah. Whether how bad the implication is going to be, we still don't know.
That's the question.
Yeah.
Right.
And so Victor valued those companies based on price to sales. I would prefer to value it based on price to earnings. But of course, with the limited years of profitability, especially for UP Fintech Tiger, they only have broke even 2020, and then we have the latest 12 months as of now. And the same thing for Futu. Futu actually has a longer record of profitability. I think 4 years ago they already broke even, and they're already making good margin out of it, right? So if I were to value them based on price to earnings, as of the time of this recording, the price for UP Fintech is about $7, and that actually will give us a price to earnings multiple around 38 times. As I check, if I remove their one-off exceptional items, convert the convertible notes that they have, and the other price that we're looking at is actually Futu, right? So Futu is currently trading at about, I think, $60 US dollars, and they are trading at about price to earnings at about 24 times thereabout. Okay, so if we take into account that both companies are growing at not double digit, but double every year, but
double digit, but double.
double.
Over the last 2 years, I think PE of 25 or 38, if you ask me, is pretty attractive, right? And of course, Futu is actually lower in terms of price to earning. But if you look at price to sales, it's a lot higher. I think mainly because Futu, they have their own clearing in-house, and that's why they get actually better margin, 40% as compared to UP Fintech that is about 20% or less, okay, in terms of profit margin. That's why they are priced it differently, right? So Futu, in my opinion, is a lot cheaper and more attractive as compared to Tiger in terms of price to earning. But both companies are at a basically they are held up by the regulator, and they are disrupting the industry. But now the court is on the regulator court. How are they going to find this guy? Are they going to ban them? Are they going to stop their Chinese accounts that they have stop from trading in the US? Because if they do that, the bulk of the business will disappear. Because these Chinese can no longer trade in the US, of course they can bring back the fund. Maybe they can still keep the fund and then trade in the Hong Kong market. that
Alright.
could be possible,
Yeah.
but we don't know.
Yeah, but
how
of course,
that
I
will
read
pans out.
some articles say that some of the Chinese people who put their money, in all this broker, and they try to get it back, right? But it was stopped by the bank,
Yeah.
right? So now there may be some issue on this also,
Yeah,
which causes also a
and-
lot of fear also.
Yeah, and with regards to capital control, we still don't know how the Chinese government will look at it, because how this Chinese customer managed to convert so much money into foreign currency and put it as an investment. That's the big question now.
Yep.
And whether would they blame these Chinese brokerages for doing
Yeah.
that, right? Or I don't know, right? So this is something that is still up in the air.
Yeah.
Okay.
No one knows, but the price has been
Yeah.
coming
So
down.
it's still a very big question mark. at
Yeah,
this
so there's a
moment.
lot of
Yeah.
uncertainty with these two companies, despite their growth. So
Yeah.
I think big question, right? I mean, I'm just gonna put you on the spot. Would you invest in these two at this point in time if
Yep.
you're on the sidelines at this point?
Yeah,
Would you consider that?
I'm still sitting on the fence, to be
Okay.
honest. The potential is big. This is the kind of investment where you either go big or go home. Okay, so I'm still sitting on the sideline, looking at all the risk, how the regulatory risk is going to play out for these two
Okay.
companies. Yeah. I mean, of course, if let's say it turn out favorable, I'm going to miss the price at the lowest. There's no way they're going to catch the lowest, right?
Okay.
And on top of that, there's ADR risk, where I think the SEC is looking to delist some of those ADR companies, basically companies like Futu and UP Fintech, if they don't comply with the audit requirements in the US.
And basically, so I think Victor, you would sit on the sidelines as well.
Yep, I will sit on the sidelines, but of course, I always say that, right? I know that as much as we say that we sit on the sideline, but there's some risk taker out there. They want to invest in this, make
Yeah.
it big or go home, But my take is, if you were to even interested to look at these two companies, please be a small percentage of your portfolio, so that in case they really get banned, it does not hurt you that much. Okay.
Yeah, I
Yeah.
mean, if you got in early, this year, and if you basically went all in on this company,
So 70-80%.
70% of your
Crazy,
portfolio
yeah.
is basically
Correct.
gone in that sense.
Yeah.
So that's very, very painful. So yes, please take the that note
Yep.
about diversification in your portfolio as well. And of course, when Rusmin said go big or go home, it doesn't mean go all in. It's just like could go. That means this investment could turn out really well,
Or you drop by 50%, another
because of
50%.
because there's all the
Yeah.
uncertainty when it comes to government regulations, and that's something that I don't think anyone would really have the inner workings of how
Yep.
the CCP is going to decide on this. All right, so
Yeah.
please keep that in mind. All right, so I think that's a pretty good summary of Futu and UP Fintech, moomoo and Tiger. Hope that was a good summary a good update for you guys, especially if you're looking at them or if you're already a current shareholder of them. I hope this update gave you a bit more information on what we think about them. All right, so I think that's a good wrap up, guys.
Yeah.
Yep.
Okay,
So
thank you.
My
Thank
name
you.
is Adam. That's Rusmin, and that's
Thank you.
Victor. Thank
And
you
this is moomoo.
Yeah, they just sent that to us during the
Mooncake Festival.
Mooncake Festival. So, yeah. So again,
Yeah.
I thought it was just appropriate.
No more Yoda.
Yeah.
Okay, so thank you so much for joining us, and we'll see you around again. Any questions, comments, put them in the comment section. If you like this video and what we're doing, please tell us, hit the like button, let us know we're doing a good job, and of course subscribe to our channel. Many more roundtables coming up again, and we'll see you around.